2025 was one of the biggest years for tax changes. It's the 2017 Tax Cuts and Jobs Act. In light of this, a lot of working professionals, particularly service members and small business owners, would find benefit in crafting a good tax strategy for this year and into the future. Today, we have the pleasure of speaking with Hunter Jennings, who is a partner and CPA at Meehan and Roby LLP in Maryland. I had the pleasure of meeting Hunter personally recently, and I really wanted to bring him onto our show to talk a little bit about, tax strategy, because they focus on helping small businesses, particularly those transitioning from being a working professional in a large organization or even in the military to being a small business owner. So Hunter, welcome to the program. It's great to have you here, and I look forward to our conversation.
Thanks so much, Patrick. Yeah, it's great to be here. Just want to give a big thank you, first of all, for your service, for all members of the armed forces that are here today. It's a privilege to be here with you all, and it's great to talk to everybody in the audience. So,
I thought, Hunter, what we could do is first maybe talk a little bit about you, just a little bit about your background. What inspired you to want to get involved as a CPA or get involved in this part of taxes and this type of business?
Yeah, sure. So I'm a partner at Meehan and Roby. We're based in Maryland. So I've been involved with the firm for about 15 years or so. I mainly enjoy working with taxes. That's the main thing I do here. So I just enjoy the kind of the puzzle that solving tax problems gives you. So every person is unique, every situation is different, and it's fun to be able to solve the puzzle of how to optimize someone's tax situation. So that's what we get to do here, and so that's why I do it. So
That's a great kind of intro for yourself. I wanted to talk a little bit about that too. Like in your experience, and I know that we have a lot of service members that follow our channel. What are some common, I guess, not just tax deductions, but approaches to taxes or strategies you can take with taxes that either service members or young working professionals that are transitioning, into being a business owner? What are some of those that that are often overlooked or even kind of unknown in your experience?
sure. So first of all, I just want to mention this is going to be general educational information. This is not going to be personalized tax advice. Everyone's situation is a bit different. The tax rules are obviously complex and constantly changing. So if anything here sounds relevant to you, I suggest please consult your tax advisor or another professional. IRS also has a bunch of free resources available online that can help. I thought first I'd start by just mentioning a few of the tax benefits that are relevant to service members in particular. If you think of the like, I think of taxes in terms of a tax equation. You got your gross income, you got deductions. So gross income less deductions equals your taxable income. Taxable income times your tax rate equals your tax, and then tax minus tax credits equals what you actually have to pay. So when it comes to optimizing your taxes, we can look at those four areas and just sort of optimize the ones that best fit your fact pattern. So the ones I'd be focusing on most of the time are the ones with income, so gross income exclusions, for example, and then more deductions. What deductions can we qualify for? So one of the deductions that service members in particular can look at is the moving expense deduction. So moving expenses, it used to be a deduction that pretty much anybody could qualify for. So if you had a change in your job and you were forced to move away to a different place, then you could potentially deduct those moving expenses. So now the moving deduction it's not gone away, but it's limited to members of the armed forces. So now To deduct moving expenses, you have to be a member of the armed forces on active duty, and your move must be due to a military order and a permanent change of station. So, a permanent change of station, for example, is a move from your house to your first post of active duty, or a move from one permanent post to another post. So if you have that situation, then you can potentially deduct your unreimbursed expenses of moving, um, and sort of, take that as a deduction. But again, it just has to be unreimbursed. Uh, Another deduction I want to just briefly mention is travel expenses of armed forces reservists. So if you're a member of a reserve component of the armed forces and you travel more than 100 miles away from your home in connection with your performance of services as a member of the reserves, then you can deduct your unreimbursed travel expenses on your tax return. So this isn't available for active duty service members. It's just for reservists. But my sister, for example, she's with the reserve, so sometimes she has to travel across the country. So like she lives in Maryland, and she's had to travel to, California, for example, for a training there. So if she's in a situation like that and she incurs travel expenses, then she could claim that as a deduction on your tax return. So just want to mention that one. There's also the combat zone exclusion. So if you're an enlisted member or warrant officer, then you can potentially exclude combat zone pay. So that's most likely, most often a combat zone as designated by the president. So if you serve in combat in a designated zone, then the pay that you receive for those services can be excluded from your income. And you don't need to do anything to get the exclusion. It should just be excluded from your wages. So that's nice. Sometimes I've gotten questions. There's a new line on the 1040 that says something about the non-taxable combat pay election. On the 1040, I think it's line 1I. So just want to mention what that is briefly. So again, although combat zone pay is generally excludable from your income, you can opt to include the combat pay in your income. And so why would you want to do that? The answer is that it might increase your earned income tax credit. So that's another tax credit that's available for some people. So you can run it both ways, including the income, excluding the income, and see which results in the lower overall tax. I think most people would benefit from excluding it, but you can check that.
Hunter, are there any particular items that are overlooked as a military service member, or even non-military working professional, as they're transitioning out of a W job into being a business owner? Are there any changes that are taking place involving taxes that are frequently overlooked or unknown to them, and that could be beneficial to know?
Sure. Yeah, there are a lot. I mean, it's one of the most dramatic things that you can do from a tax perspective is switching from an employee to a self-employed person. So yeah, one of the big changes is estimated taxes. So when you're an employee, you have withholdings on your taxes, federal and state withholding, and that just happens automatically. So you don't really even have to think about it. Um, so you get the withholding, and then when you file your return, you claim a refund, and that or you owe taxes, and that's it. But when you own your own business, you have to make your own quarterly estimated tax payments, and those are generally due April 15, June 15, September 15, and January 15 of the following year. So, for example, for tax year 2026, the fourth quarter tax deadline is going to be January 15th, 2027. Now, one of the things that we want to look at, one of the things that changed with the OBA, the new tax law that came into effect last year, is if you think about your itemized deductions, you have your state and local tax deduction as an income tax deduction for your itemized, and so that used to be capped at $10,000. So now with the tax law change, that's increased to up to 40,000 depending on your income. So if you make less than half a million per year, generally the salt cap is 40,000 now. So you can get more deduction potentially by paying all your estimated taxes in the same year. So for example, if you've paid in 30,000 of income taxes through 3 quarters, then it might make sense to pay your fourth quarter payment in December of 2026 instead of waiting to January 2027, and then you can get the full 40,000 SALT deduction instead of uh, waiting until next year. So it's a good tax planning strategy to think about timing for estimated taxes, and that's one of the things we work with our clients on.
A question on that.
Yeah.
Don't mean to interrupt you, but just a question on that. You mentioned paying it a little bit earlier. Is the advantage there that it allows you to have a more of a tax write-off the following year? Like you're kind of not giving up the amount underneath that salt cap in a given year so as to free up more in a following year. Is that kind of what you're getting at with that?
Well, it's to maximize your deduction for the year in question. So for example, if we're talking about tax year 2026, if we make the fourth quarter payment in December 2026, then that counts as a deduction for 2026. So if we waited until 2027 to make the payment, then it wouldn't count as a deduction until 2027.
Got
So,
it.
so it's really about just maximizing what you can take for the current year.
Understood.
Yeah, so that's a good question. So other tax benefits, uh, I I really think anyone who owns a small business should think about what sort of retirement plan they want to use. So I love IRAs and 401ks. I like retirement plans in general since they're a great way that you can get tax deductions without losing any of your wealth. Because all you're doing when you make a retirement plan contribution is you're moving money from one account that you own to another account that you own, and you get a deduction for doing that, which is great. The only downside is that, obviously you don't get to touch that money until you're 59 and a half, but still, it's a great way of getting a deduction because they don't, there's not a lot of opportunities to do that in the tax law to get tax savings without losing any of real wealth. So we often recommend doing for simple businesses where it's just one owner. We often recommend doing the SEP IRA. A SEP IRA is a good option for people, especially if you don't have employees because if you have employees, then you'd have to make contributions for them as well. But it's the SEP IRA is very simple to set up administratively, and so it's just your CPA can help you can walk you through it, but it's real easy to set up as opposed to like trying to do a 401k or so forth.
Speaking of a CPA helping you, do you have any advice or recommendations on qualities of a good CPA? Like if someone is, getting out of the service, or even if they're in the service and they need a CPA, let alone those who need a business. What are some or have a business? What are some qualities that you would look for that you would recommend a viewer looks for in a CPA to make sure that they're getting a good one?
Sure. Yeah, I mean, just speaking of based off what I know, I think you have an advantage picking somebody who's been around for a little while, someone who has shown that they have a good track record, someone trustworthy, because I mean, really, you're kind of entrusting a lot of your personal information to this person, so you want to make sure that they have a history of respecting that trust and confidentiality. Related to that is having a good technological system in place. So, some firms they use a lot of some very outdated systems. So, I've seen cases where 1040s might just be delivered via PDF and an email, and that's really not good enough anymore. Not that it ever was good enough, but what you really want is a firm that uses modern software with modern secure portals. Um, so you want someone that takes confidentiality seriously, and uses all the technological tools that are available. Um, Also, different CPA firms have different levels of expertise in different things. So it's important to look for somebody who kind of matches with what you're looking for. So state taxes especially tend to be kind of regional. For example, we're based in Maryland, so we do a lot of work in Maryland, D.C., Virginia, and Pennsylvania. And we do a lot of work with people who own small businesses or real estate in those areas. So that's kind of our wheelhouse. Um, we have some exposure to work done for West Coast folks, California, Washington State. But if you're looking for somebody who's really an expert on the West Coast states, then you probably not want to pick us. You'd want to pick somebody who has the expertise there. Um, so, and then I'm kind of I enjoy smaller. I'm kind of a bias towards smaller firms in general, smaller accounting firms. Just I feel like the people who work in smaller accounting firms, they tend to get broader exposure to a lot of different things. So they tend to get this, they handle a wide variety of client situations and industries, whereas with the larger companies, they tend to have deeper specialization in specific industries. Um, and maybe they tend to be better at things like regulatory issues, international issues, and very specialized topics like that. But I think if unless you need advice in those arenas, I think you're generally better looking for a smaller firm, just because uh, they're more likely to have a better holistic view of things, and they're more likely to have seen uh, someone with your sort of situation before, and they know how to deal with it.
Yeah, that's very good advice. Kind of knowing what it is that you're looking for and tailoring your needs to the capabilities of that CPA. Um, are there, going back to the previous question, did you have other items that you wanted to share before I had brought this other question to bear? Were there other items as far as military service members owning or starting a business, tax items that are often overlooked, or did you cover the big ones already?
Sure, I got a couple more we can go over.
Sure.
So one that's often missed is the self-employed health deduction. So if you pay for your own health insurance, which is often the case if you're starting your own business, if you're moving away from an employer, so you might be used to your employer paying your health insurance premiums. So now you might be in a situation where you have to go to the marketplace, you're paying your own premiums. If that's the case, then you can take a deduction for that. So it's another non-itemized deduction like the SEP IRA, like the self-employed retirement deduction. So it's a nice deduction to have. So a lot of people think that you're stuck with claiming that health insurance as an itemized deduction, which basically means that you probably won't get it because of the AGI limitations there on medical expenses. But you could potentially claim the self-employed health insurance deduction. Uh, Another one is the qualified business income deduction. So this is something that was brought in with the TCJA of 2017. And so what that lets you do is it generally lets you deduct 20% of the net income from your business. Um, so it's just saying you calculate whatever your net income is from your business, and you take 20% of that, and then that's a deduction. Um, some caveats there that if you're in that's generally the rule if your income is below like 200,000 single or 400,000 joint. If your income is higher than that, then you need to meet certain requirements, like your business has to not be in certain disqualified types of businesses like consulting and lobbying or health industries or things like that. And you also need to meet wage requirements. You need to pay a certain amount of wages to get the deduction. And there's a lot of details there. So if you think you might qualify for it, you should talk to your advisor. So that's one of the more complicated deductions. Uh, yeah, and aside from that, there's the good old business use of home deduction. So if you have a room that you use exclusively for business purposes in your house, so if you work from home, then you could potentially claim that business use of home deduction. So there's a simple way of doing it and a complicated way based on actual expenses. But if you work from home and you have a dedicated office space, it's worth talking to your tax advisor to see how to optimize that.
Oh, great. Yeah. We actually have a question from a viewer here who said Hunter mentioned real estate. Does he have any recommendations as far as tax advantages of real estate? Kind of a broad question. Um, so I guess maybe you had mentioned real estate as an area that your firm has expertise in. Um, if let's say a service member gets out, or maybe they're still in and they have a real estate business of some kind, maybe they're a small landlord, are there any particular or frequently overlooked tax deductions being a real estate business owner, that you've seen, and that should be used more frequently?
Sure. Yeah, I can talk about that a bit. So yeah, we frequently have people who, maybe they own a second home somewhere, a second piece of property, and then they rent it out, for example. So, look at your 1098 and everything on there. So everything, most things that are on the 1098 that you get, that's the tax form that you get from your lender. A lot of things on there can be taken as a deduction. So your mortgage interest can be taken as a deduction, your real estate taxes, and then sometimes they list the insurance. So any insurance that you pay on the house can be a deduction there. Um, Another thing I want to mention is depreciation on the home. So sometimes this gets missed. So if you own a piece of real property, so what you do is you make an allocation between land and building from the property based on the relative fair market value of the land and the building, and then you can write off the building over a long period of time. So for residential property, I believe it's 27 and a half years. So if you take the cost of your property that gets allocated to the building, you can potentially write that off over 27 and a half years and take that as a deduction. So often I find that, after we take into account all these deductions, then uh, often you end up in a tax loss. Even if the property is generating cash flow for you, you often end up in a tax loss situation. So um, what else?
A
Yeah.
question to follow up on that. I've heard before that sometimes real estate investors will do what they call the cost segregation analysis, where they like divide out different parts of the improved structure. Is that something that is feasible, or is, in your experience, is that something that's often more effort than it's worth?
Yeah, I can't say that I've seen it a lot.
Okay.
The main because first of all, they tend to be very expensive. So they tend to be done by big firms who specialize in that sort of thing. But it can be worth it depending on how big the property is. So the reason for doing a cost segregation study is uh, you're trying to break out the pieces of the property that get depreciated over shorter time periods. So like for example, 5 and 15 year property. So you're trying to break those out so you can get accelerated write-offs on those pieces of the property. Because if not, then everything might be trapped in, 39-year property. So if you think that a good portion of the building might be able to be split out into things like that, like qualified improvements that are 15-year furniture, or 7-year property equipment, 5-year property, then it can be worth it.
Yeah, that's a really good point. So following up on you, Hunter, like how would viewers reach you? Like if they, wanted to follow work that you do, or are interested in doing business with you, or just if you have any, guidance for them on how to contact you, um, how do they follow your work, or get in touch with you if they're interested?
Sure, yeah. Again, my name is Hunter Jennings. So my firm is Meehan and Roby. So you can reach us at 410-561-3375. You can reach me at my email address. So my email is hjennings@meehanroby.com. So that's HJENNINGS at meehanroby.com. So that's MEEHANROBY.com. I'm on LinkedIn as well, so you can find me there. But yeah, that's how you'd reach out to me. So if you have any follow-up questions, or if you just like to chat about taxes, just shoot me an email or give me a call.
Is there anything else, Hunter, that you want? Roby LLP, or just about taxes in general?
Sorry, you cut off there for a moment. What was that?
I was just saying, was there anything else that you wanted to share, just about yourself, the firm, or just taxes in general?
Sure. Yeah, I think I covered pretty much all I wanted to. Just yeah. I mean, yeah. I think just as the main takeaway, switching from employment to owning your own business is very challenging. There's a lot of things that are involved there. We didn't even go much into like choosing what type of entity to pick, and things like that. So, um, picking an entity. Getting a bank account set up, getting a bookkeeper, getting an attorney. I mean, there's a lot of things that you have to deal with there. So it's important to choose someone with good experience there. But yeah, I think that's about all I wanted to cover. So
Okay, great. Well, I'm going to post the contact info that you shared below the video. So if anyone needs to, or wants to get in touch with you, that they can. And then again, like Hunter had mentioned earlier, everything that we discuss, in this video, or any videos on our channel, it's for educational purposes only. This isn't individualized tax advice or investment advice for anyone. Please make sure that you consult with a professional for your personal situation. Hunter, thank you very much for being a part of this interview. We've really enjoyed having you. We hope to have you back, and we hope that you continue to have success with your business.
yeah, thank you so much, Patrick. It's great to talk to you.
I want to say thank you to the viewers. Please remember to like, comment, and subscribe.